Welcome. In this video, going to show you guys how incredibly well market structure works on a 1 hour time frame. So the edge that this can give you is so significant, but it's so overlooked by many and done wrong by many more. So I want to show you guys this approach. I'm going to test it 100 times in a row, just show you guys the results to give you an idea of how much of an edge this gives you. I did a video about a week ago on the 4 hour time frame testing this exact same method of market structure. And in that video, you could see just how well it works. Of course, I would recommend doing more testing, but you can see the proof of the concept with that video, and you're going to see it again in this video. So I'm going to do the 100 tests, but this time on a 1 hour time frame, not the 4 hour time frame, because a lot of people really liked that video and they said it was super eye-opening, super helpful. But they wanted to know, does it work on a lower time frame as well? So 1 hour is as low as I'm going to go, but we'll see. 1 hour versus 4 hour, what works? Is there a difference? Are we going to see such an incredible edge on the 1 hour like we did on the 4 hour? Well, we will, but I'll show you. So before getting into the actual testing and all that, I'm going to go through some setups, show you the market structure. I'll draw it in here, show you exactly what qualifies as a winner or a loser, so that you know exactly what I'm testing and how to identify it yourself. Before doing that, quick shout out to my affiliate exchanges. So if you want to trade crypto and you're in a jurisdiction that cannot access most exchanges, check out Bit2Next exchange with my affiliate link in the description. These guys are allowing anyone globally, no KYC, no VPN needed. So check them out. Good competitive fees there. And I know those of you who live in countries where it's kind of difficult to access most exchanges are struggling. So definitely check out Bit2Next. Most exchanges are not allowing US customers, for instance, but Bit2Next will. Now, there's also BingX Exchange. These guys don't require KYC. Some jurisdictions may need a VPN though. These guys are awesome. I really like these because they're allowing you to trade crypto, indices, commodities, Forex, and stocks all on one exchange. Partnered with Chelsea FC, and really good exchange so far. They've been doing really well and they've been growing rapidly. So check out BingX if you can access them. There's also Bybit, my third affiliate exchange for this video. And of course, everyone knows Bybit, good crypto exchange, been around for a while. A lot of liquidity here. So good exchange, Bybit, but you do need KYC. So that's the deal. Thank you guys if you consider using one of my affiliate exchanges. Now let's get into the examples. I'm just going to start over here and we're just going to go through a bunch of these setups so you guys know exactly what I'm testing, what qualifies as a winner or a loser, how to draw the market structure in. So let's start drawing in our market structure. So we have this move down. We're pushing down. So we've broken some structure up here. We're in a downtrend. Let's start identifying market structure. So what qualifies as a valid pullback to actually draw a structure on? Well, let's draw in the low where this pullback begins. So we see a swing low here, and a short-term swing low is formed when you have a candle in the center that makes a low, and the candle to the left of it is a higher low, the candle to the right of it is a higher low. That's it. That's a swing low, so it's a 3-candle pattern. See another one here, we get another swing low. But when we see a swing low, we can start looking, okay, maybe we're getting into a pullback. And when our market structure is bearish, we're assuming that it's going to continue to the downside with a lower high on close and a lower low on close. So what we're expecting is, okay, we're getting under a pullback here. But what qualifies as a valid pullback to create a new structure? Well, we need to see at least swing high or swing low to swing high to swing low. So we need to see a 4 swing high, swing low, short term, swing high, swing lows in one pullback. And there needs to be at least one on the opposite side. So if we go short term swing low, we have to have a short term swing high somewhere in the mix, which we do have here. All this is one pullback. Okay. And so we have the pullback starting right here, and we're going to keep that as our pullback until there's a close below it. And clearly we get 4 up, down, up, down, up, down throughout here. Eventually, we get a breakdown right here, okay? So this is a successful market structure follow through to the downside. This would be a winner because we're in a downtrending environment where we are in bearish market structure. We just assume that's going to continue. Now, we have new market structure. So the highest point of this pullback before we broke down from that original beginning of the pullback level. So this candle here breaks down on close, closes below that level, and it confirms a successful follow through to the downside. And we have a new market structure high that needs to hold on close in order to stay in bearish structure. Okay, so what do we do now? Well, that's one successful follow through to the downside there. And now what we're doing is we are expecting that this pullback or any pullback is going to just follow through to the downside now and not break above this high, right? So we have this gets into a pullback. We have that short-term swing low there. So we think, okay, maybe we're starting a pullback down here, which we do. We get into a pullback. We get our 4 swing highs, swing lows, up and down here. So this is a valid new pullback. And eventually, over here, we break down on this candle, right? So that confirms a follow through. And in between there, this was our highest point. We did not break the market structure to the upside here. So there's another success, another lower high, lower low over here. And this is our new market structure high that has to hold on close. So now, okay, that was success. We expected this one here would pull back and then follow through to the downside. We expected this one would pull back, follow through to the downside without breaking over this high. And now we're expecting this one here is going to pull back and then follow through to the downside. But it doesn't. So this is a loss. So this candle here, this one, big green candle, closes over that level, which is our most recent market structure high. So now what do we do? Well, we are now assuming that we're going to see an uptrend. We're going to assume that this low, the lowest point between here and where we broke the high, breaking market structure to the upside, right? That's our new low that needs to hold, and we're just assuming that is going to hold, and we're going to continue up higher after a pullback. So what do? We start a pullback here, swing high. Pullback starts, we pull back sharply, and we just are bullish here. So this here, we're bullish, expecting that this high, we're going to follow through out of here. Follow through, continue this. We're going to hold this level down here on close. So what do? We go up, that's success. We break through and follow through to the upside, okay? So what do we now do? Well, we can update our market structure a bit. So we had this high, and what was the lowest point between the beginning of the pullback and our breakout, which followed through our market structure to the upside? Well, this is the lowest point. So we can draw that in. This is our new low that we assume is going to hold. And so now we're just waiting for another pullback, and we're assuming again that it's just going to continue to the upside and hold market structure. So this is our market structure low, updated, that needs to hold. So we get into a pullback starting right here. So we get that short-term swing high, and then we go short-term swing high, short-term swing low, short-term swing high, short-term swing low. So we have a valid pullback forming here. And we're just assuming that this low is going to hold on close and then follow through to the upside. So what do we get? We follow through and we close back above after pulling back, follow through as we expect. So we can put in a new market structure low. Now this is the new one. That's a success. We followed through and we do it again. New low, lowest point between the high that started the pullback and our breakout that closed above the high that started the pullback. Okay. Now what do? Okay, we get into another pullback. And through this pullback, we're just assuming that it's going to hold a higher low compared to here on close. Okay. So what happens? We break out, again, continue higher. That's our new low. We update the low to here. So market structure must now hold here. We're just assuming it's going to hold here on close and continue higher. So what do we get next? Okay, so we have another pullback right here. See the multiple? Short-term swing high, short-term swing low, short-term swing high, short-term swing low. We get at least the 4 there. So we started the pullback there. So we're just assuming that this is going to be following through to the upside. There's our low, right? So we assume this is going to follow through to the upside. After we break that high, we consolidate here, get a valid new structure here because we have the multiple short-term swing highs and swing lows all in one pullback. We follow through, okay? So once we break that, we're waiting for another pullback. What are we doing? We're assuming that this is going to hold higher compared to this level now. So this is our new market structure that must hold, that we expect is going to hold and continue higher. And so what happens? Well, that's what we get. It holds. This is our new low. We break out to the upside. So we update this level higher because we have a new market structure low that must hold. We broke out. And now we start looking for the next pullback. So when do we get into a pullback? Oh, we see a short-term swing high right here. Get another short-term swing high, but we keep going higher. So we haven't started our pullback yet. Now here is where we start getting our pullback. So note, we get the short-term swing high, another short-term swing high, short-term swing low, short-term swing low, short-term swing high, all in one consolidation here. So what do? We break out to the upside. We're assuming it's going to do that. We're assuming that it's going to go higher. So where's our market structure now? So this is the level to hold now. We update the low from the point where the pullback began. Look to the right. What's the lowest point between there and where we broke out? It's right down here. Okay. So we must hold this level. We're just assuming that this pullback now is going to go higher. But what does it do? It fails. So this time it ends up breaking down over here on close, which shifts our bearish structure. Okay, so now we are no longer in bullish structure, we're in bearish structure. Once this happens, we now just assume it's going to continue down. And so let's update our market structure. Well, now we have a new high before the breakdown. So where did the breakdown happen? Right here. Where was our previous market structure low? Right there. What's the highest point between those 2 points? Right here. So that's the high that now has to hold to stay in bearish structure. So we're assuming we push down, we break down there. We're assuming that we're just going to keep going down, hold a lower high compared to here. And so what happens, we're just waiting for us to get into one of those more complex pullbacks. So we go up, we see another short-term swing high, short-term swing low. It's not all in one pullback, so we're just waiting. Okay, here we go. We start stringing together some short-term swing highs and lows. Get a proper pullback so that can create some new structure. And we haven't updated this high yet because we haven't done any new structure yet. So what are we going to do? We're going to draw in our new potential low that we're expecting is going to be broken down. And what level do we expect is going to hold? This one here. We're not going to be breaking over that high as the expectation. And what do? We go up, hold, lower high, and full follow through to the downside. And that was what we expected. We expect that the bearish market structure will continue. And we do so. So what do we have? A new high. This is the highest point between the low that started the pullback and the breakdown. Okay, so we break down in this candle. Now what are we doing? Expecting that now this is going to hold. We're expecting we continue to the downside. And so we just wait again for one of these complex pullbacks, which we get here. So we get the 4 minimum short-term swing high, short-term swing low, all in one pullback. So what's the low that begins this pullback? It's right here, right? We're just assuming this pullback is going to follow through to the downside. And so eventually it does. So right here, we close below it on this right candle. New high that has to hold for bearish structure. So now we're assuming this next pullback is going to make a lower high and then follow through to the downside. And that's exactly what it does. Another win. And so we break down here. We're in a little bit of a pullback here. That's kind of a short-term swing low, short-term swing high, short-term swing low, short-term swing high. So expecting that we just continue down. We're just going to be holding lower than this high now. And What do? We follow through. We have a new high that we're expecting is going to hold, new market structure, and I'm going a bit faster now. Okay, where do we start this pullback? We start it right here, and we're expecting it's going to keep going lower, and that it's going to hold a lower high compared to this. Okay, and what happens? We hold the lower high compared to this level here, holding bear structure, and we follow through to the downside for the new low there. Close below it, confirm, that's another win. And what do we do next? Well, now we're shifting again. So this time it doesn't work. We have many wins, many follow throughs, but it's not always going to work like that. So this level here is eventually broken, puts us into a bullish structure, okay? Makes sense? So that's a lot of examples. It's time to test it 100 times in a row. Hopefully it makes sense. I have a couple other videos discussing this uploaded recently if you want to see more examples about understanding how to draw in the market structure correctly, but hopefully that was enough examples so you understand it. Anyway, fast forwarding through the 100 tests now, and then I'm showing you all the results. All right, let's take a look at the results here. So this was tested on Bitcoin US dollar, 1 hour time frame, and I was simply testing market structure continuation or break. So out of the 100 that I just back tested, 73 were follow throughs. So we're going to call those wins or successes, whatever you want to call them. 27 were breaks, failures, losses, whatever you want to call them. So this shows a significant edge for continuation, which is a big deal when coming up with a trading strategy or just doing your market analysis, knowing which direction to be trading in. So taking this information, knowing what the structure is at any given time is important. If you have such a high chance of price going one way or another before breaking a certain level, that is some valuable information to know when making a trading decision. So I put together a little example trading scenario, just something simple. So let's just say if you could figure out a way to enter with market structure on your side with a 1 to 1.5 risk to reward ratio and just assuming market structure continuation, then the gain on the account for this sample of 100 trades could have been 82.5%, risking 1% per trade, or 165% risking 2% per trade. So just kind of a little example, if you can figure out a way to get a 1 to 1.5 risk to reward ratio based on this specific sample of price data, this 100 tests that I did, 73 of those were successes, potential for quite a substantial gain on the account. So something worth looking into. Hopefully you guys enjoyed this one. Can also watch the 4-hour test where I tested 163 market structures in a row with a just over 70% win rate with that one. So once again, showing that market structure is extremely valuable, important, something that you should pay attention to. And so if I didn't already say it at the beginning of the video, I don't quite remember, but something to look at is weekly market structure. Know your daily market structure, know your 4-hour market structure, and know your hourly market structure so that you can paint a picture for the most likely scenario. And when you have things lining up nicely, you can have a high probability trading setup. Obviously do your testing and go from there, but something to definitely look into. Hopefully it's helpful. This information can hopefully help quite a few people who maybe have been kind of ignoring market structure in the past. So open your eyes a bit to new things if you haven't been paying any attention to market structure, as it's kind of like a basic first time thing that you learn when you start trading. Is at least that's one of the first things that I learned about was just market structure. And so something that I think a lot of people who have been trading for a while actually kind of stop paying too much attention to or never learn to do it properly. Something that you should probably focus on if you haven't been doing it correctly. So that's it for this video. Make sure to like the video if you liked it. Comment for the YouTube algorithm. Subscribe if you haven't. Appreciate you guys watching as always, and have a great day.